Hi, Samir. Good afternoon. Welcome to this podcast from Grip. Thank you for making the time to speak to us on this Saturday. Pleasure to have you on.
Hi, Nikhil. Thanks for having me. It's good to be here.
Yeah, like you and I have spoken, it's we've known each other now for maybe 3 or 4 years. We've bumped into each other at conferences. We've obviously crossed paths with maybe even potential transactions. But it's good to now have this sort of a partnership between Revfin and Grip, where we are bringing an opportunity of Revfin assets onto our platform for retail investors, and obviously wanted to use the opportunity for users on our platform to learn more about you and more about Revfin.
So, Nikhil, we first started interacting during COVID, so it's been 5 years now.
Yeah, it's been 5 years. Absolutely, and look how things have turned out. So it's great to see the progress that Refin has made, and it's fantastic to bring things together in this manner.
Absolutely.
Maybe for the benefit of everyone who's listening in, it'll be great just to understand your background. I know you moved from the UK just before, I think a couple of years before COVID. What prompted you to move, and what prompted you to start Refin?
Sure. So, I'm Samir Aggarwal. I'm the founder of Revfin. Uh, Prior to starting Revfin, I was a career banker. So, worked in the lending industry for 12, 13 years, mostly in credit risk management. I spent about 10 years in the UK as well. And I spent 10 years with the bank that I first started working with, which was HSBC. I worked with them in my last role with them. I was managing credit risk in a group role. So I had the opportunity to work with teams and countries across 6 continents. I also spent about 2.5 years working for a startup based out of London, which was focused on lending to subprime customers. Very different, but a very rewarding, rich experience. And then, as destiny desired, I was basically the entrepreneurship bug bit me one day, and I just decided, on the spur of the moment, to just quit my job and come back to India and set up Revfin, right, without any much thought or planning to it.
Was Refin
Uh,
already in your mind when you moved to India, or was it something that you planned for later?
so no, actually, it's only after I decided to become an entrepreneur I started thinking about what would I do, and the time I had to move to India from the UK, I used that time to start thinking about what I wanted to do.
Correct.
So my thought was very simple, that I want to work with a type of customer segment that has no access to credit. And that could be because they have no credit history, they have no banking transaction, they may not have education, or so on and so forth. So I wanted to build a digital platform for them. And I was clear that that customer segment is not going to be able to give us any data to underwrite. So you have to generate data as part of your loan application journey. So that was the first thing. And the second thing for me was, if we stop thinking about past credit behavior and you start thinking about personal behaviors, then that can also give you hints as to how they're going to perform in their financial products or credit products, right? So I also had the opportunity to do some experimentation on things like psychometrics, gamification in the UK.
Correct.
So I thought if we can actually expand on that and start thinking about how does a personal trait or a personal behavior translate into intention to repay. So that was sort of the going in thesis, that how do you do that,
Yeah, and if
right?
you do that, then you
So
can expand who you underwrite, because you suddenly
correct.
have a larger base of population that becomes accessible.
Absolutely. So that was the going in thought. So just decided to come back to India. Initially, I was, let's say, a very ambitious entrepreneur at that time. So I wanted to name my company Revolution, because I thought I'll come and create a revolution in how financing and underwriting is done. Later on, changed the name to Revfin, which was Revolution in Finance, as a short form for that. Right. So those were the beginnings.
Ah, okay, interesting. And when did that, the original idea of financing, which obviously Refin continues to do, get linked to electric vehicles?
So it was very interesting because the first loan that we did was for an electric vehicle,
Oh, really? Okay.
but it was very unintentional. It wasn't designed like that. So let me now tell you the backstory, right? So when I started working, like I said, we built a platform for underwriting customers with no credit history, etc. But we had no game plan in terms of what our go-to-market strategy was going to be. So we started looking at various different types of things. And one day a friend of mine called me and said, Samir, I want you to meet somebody. I said, okay, just send them across. We'll meet who that person is. The person came to meet me, and that person was a manufacturer of electric three-wheelers. And these are basically e-rickshaws that you find a lot in the northern parts of India. He said, Samir, I'm a e-rickshaw manufacturer. I said, what is an e-rickshaw? I have no clue. Even though I live in Delhi and there are lots of them in Delhi, but it doesn't register in your mind unless somebody says, hey, that's an e-rickshaw.
Sure.
So yeah, and then so basically somebody said, hey, Samir, this is what an e-rickshaw is, this is what it does. I said, okay, sounds interesting. And so 2-3 things happened, and this is how I believe a lot in destiny. So first thing, the day I was having this conversation, it was in October in Delhi. It was a very polluted day. Right, so it was almost time for Diwali, and I was just looking out thinking, hey, you know what, there's so much pollution, so something needs to be done, so electric vehicles may be a good way to start. That was one. The second thing, the person who came to meet me, his brand was called E-Kranti. Okay, Kranti is obviously revolution in Hindi. And I said, we are revolution, you are Kranti, that's a perfect fit. Right, so basically that's how we started, and we said, yes, of course, we'll start working with you. And then as luck would have it, we started, the first loan that we did was for an electric three-wheeler. It was to a lady named Farzana in Punjab.
You never forget
that we did our first loan.
You never forget the first.
Sorry, say that?
You never forget the first one.
Yeah, absolutely.
Yeah. Got it. Okay. No, that's super interesting. Maybe let's connect the dots to where you are today, right? That is maybe 6 or 7 years since that first loan. Revfin obviously has now, is over 600-700 crores in AUM. Talk to us a little bit about what are the segments within EV that you have stayed on, because you continue to 100% focus on that segment. But is it always, it's now e-rickshaws, it's more than that? Has the customer profile changed? Would love to hear more of that, please.
Sure. I'll give you a slightly long answer, Nikhil, to this one. Whilst I told you how we started, but let me also say why we wanted to focus on electric vehicles. Of course, climate and all of those things, were a starting point. But when we started looking deeper into the segment, we realized 3-4 things. I'm talking about right now about e-rickshaw segment, and then I'll talk more generically about electric vehicles. The first thing was that the person who was driving these vehicles, they were almost, at that time, 6 years back or so, maybe 1.5 to 2 million e-rickshaws on the roads.
Oh, really?
And without any form of formal structured financing available. And I just found it really bizarre that there are so many of them on the roads. Yeah. And I said, how are people doing it? Why are they doing it? And 2-3 things came out. First, there was a significant adoption in Delhi, but also in other North Indian states like UP, Bihar. And we realized a driver living in a tier 2, tier 3, perhaps even a tier 4 town in UP, Bihar was earning 25 to 30,000 rupees a month. And when I spoke to the drivers, they said previously they were in some other profession earning about 8 to 10,000 rupees a month. Okay. I said, wow, that's a spectacular change to personal economics. Yeah. Going from 8 to 10,000 to about 25, 30,000 rupees a month. That was one. Second, they were becoming asset owners for the first time in their lives. Right? So they were becoming community heroes. Huge pride associated with that. So the socio-economic impact was significant. That was one. Sure. The second thing, like I said, there was no formal structured financing available. So, I thought here is a market where there's a big opportunity, big impact, and that impact is going to drive scale, and no formal financing available. So it was also in some ways a very clean slate to come in and try to shape the way the market operated. And then from a larger perspective, if you think of it, most of these vehicles are used for last mile passenger mobility.
Right.
There is no ICE equivalent to these vehicles. Right? So last mile passenger mobility in India is a very big issue. How do people commute?
Sure.
In big cities is fine, but in small towns it becomes very, very challenging. And also in big cities, if you have that last mile commute from a metro station to home, that was also challenging. And mostly it was serviced by cycle rickshaws, which e-rickshaws have now, or motorized electric vehicles have now replaced. But in small towns, there was no option. People were walking, taking bullock carts or cycling or whatever, so all of that has changed. So obviously there's a huge potential, huge scope for expansion. And I think that's what really attracted us to this segment, apart from obviously the fact that the driver economics were changing significantly, right? So that's the reason why we said, let's focus on these type of vehicles. And when I say these type of vehicles, it's an e-rickshaw, but now, if I just broaden the story a little bit, it is an electric three-wheeler used for commercial purpose.
Sure.
Yeah. And first 3-4 years of our existence, that's the segment we focused on. That's the segment we kept scaling. And as we were doing that, we realized that there were certain challenges as well. One, the customer segment we were operating with was obviously difficult, very difficult to underwrite, but that's something we were already solving for. But the new problem that arose is the vehicles, the product that we were financing was a new type of a product in the market, new technology, no secondary market, no product standardization, etc. Right? After sales service weak and so on and so forth. So a lot of infrastructure related issues with the product itself. So we had to solve for that also. And then gradually we can talk about how we solve for those as well, but gradually we started solving for those. And once we solved for those things, and that was primarily driven either through use of technology or through various partnerships that we built, we realized that this problem on the product side and on the customer side is going to be similar across different categories of electric vehicles, because all of them are new.
Sure.
Especially in India, when you look at the vehicle, it's mostly two-wheelers, three-wheelers, so smaller forms of vehicles, which have not necessarily seen a lot of scaled adoption, maybe except in China and nowhere else in the world. Right? And of course, India was manufacturing indigenously, so we knew there was going to be challenges across various product forms, etc. So we, about 2.5 years back, we decided that we like the commercial electric vehicle space. The cost of operating these vehicles is low, the total cost of ownership is low, driver incomes are higher, net incomes are higher. So we should actually expand into other categories of electric vehicles, but focus on commercial side of the business. That way we could also stick to our core customer base, which is basically people who don't get access to credit. And the way we think about it is the technology solution, the psychometrics, etc., all of that we built is for measuring intention to repay, and ability to repay is getting created through the vehicles we are financing, because those are all income generating assets.
Yeah.
Right. So then we started venturing out into different types of commercial vehicles, starting with two-wheelers first, then e-autos or L5 forms of electric vehicles, four-wheeler taxis, and light commercial vehicles like Tata Ace category of vehicles. So we started financing all of those. So these are all the different types of products that we finance now across the country.
So a question that someone would ask is, vehicle financing is very standard in India, right?
Yeah.
We've all heard of Hero FinCorp, Bajaj Finance, who provide vehicle financing. What you are doing, what Revfin is doing, someone can take a 15,000 feet view and say it is vehicle financing.
Yeah, absolutely.
Why was this something that even required to be solved in India? Why was there when you started the business, 1.5 million that were not financed from a structured manner? And why was there a need for a dedicated, focused EV financing company? How would you?
Yeah, so I think there are 2-3 very critical reasons for this. The first reason is that the vehicle is fundamentally different. This vehicle has a battery. The battery deteriorates over a period of time. It requires replacement. So how the depreciation of the vehicles work, etc., is very, very different. The technology of the vehicles is very, very different. And that also meant, and just to kind of build on it, whilst it's a very different type of a technology and different depreciation, deterioration, etc., you also need to now start thinking beyond just the battery to say, what about the remaining infrastructure that is required for this vehicle? After sale support, spare parts, secondary market, all of that does not exist, right? So there's a fundamental difference in the engine, then the infrastructure that's needed to finance vehicles, that does not exist. That was the second thing. The third thing was that we saw that the adoption that was happening in commercial vehicle space was, we saw a very heavy adoption in small towns. We saw a very heavy adoption coming from a customer segment that nobody lends to. So in some ways, that customer segment was also getting attracted to electric vehicles.
Sure.
Right. So that segment is also very difficult to underwrite. Right. So and finally, I would say that the way you can manage an electric vehicle and the way you can embed technology in an electric vehicle is far superior to what you can do with ICE vehicles. So that also creates a lot of opportunity to do underwriting and lifecycle management in a slightly different manner to as you would do for ICE. So these are the reasons why a separate or a focused, dedicated financial services company is needed for electric vehicles.
Yeah.
And I would also go on to say that, during the course of our time in this segment, we've seen a lot of large incumbents come into this segment. None of them have survived for very long.
Yeah.
Right? I'm saying that with a lot of responsibility that, it is very different. It's very challenging to operate in commercial two-wheeler, three-wheeler space.
Do you have an estimate of how large, like you mentioned, some of the traditional incumbents have come? How large would be some of the incumbents' business in EVs, in EV financing today for commercial segment?
So I would perhaps divide that into two categories. One is captive units, right? So a lot of large OEMs have their own captive financing units.
Sure.
Of course, over there is an obligation to finance those vehicles, and they would be sufficiently large. But if I discount those, I don't know. I don't think there's anybody who's large or larger than us in the commercial electric vehicle financing space, in the two-wheeler, three-wheeler segment.
Yeah,
Of course, if somebody's finance buses or trucks, that's a very different game. But I'm just talking about the small commercial vehicles. I don't think there's anybody large in that space.
No, we haven't come across anyone in any of the work that we have done for someone who is
Yeah.
as large. And in fact, I would think that their portfolios are almost insignificant to the total AUM that most of these traditional incumbents manage. Having understood that difference, right? I think the natural question for someone who's looking at making an investment will be, if there are these differences, what has Revfin done, and you alluded to it earlier, to make sure that it mitigates the risk of a loan to someone who is unbanked with an asset class which is new?
So I would say three, Nikhil. I would say three things. One is, like you mentioned, that unbanked customer. How do you underwrite that customer? And sorry, not just underwrite. Also, how do you manage that customer? Right. So I'll give you examples of how we've been able to crack this. One is, we partnered with IIT Kharagpur to develop a psychometric assessment tool to measure intention to repay, right? And that was on the underwriting side. We also created an app where people can download the app and apply for a loan journey themselves. Because also keep in mind that the adoption is happening in small towns, and the scale of adoption at a dealership level is very low, meaning a dealer does maybe 5-7 sales every month. So you can't have a person seated over there. So you need to use technology to actually enable your own customer onboarding. Right. The third thing is, we've actually gone very, very deep into geographies. We are present in more than 1,000 towns right now, and we have created physical presence in those towns and obviously digital presence as well. Right. So it's not just about how you underwrite the customer, but we've been able to underwrite that customer digitally, and we've been able to go very deep in terms of helping us to manage collections and so on and so forth with that customer. And we have to go really deep into tier 3, tier 4, etc. So a lot of people say that, we want to build for Bharat, but start in cities. But we actually had to start in small towns. So we've actually gone the reverse and built really deep geographical presence. So that was one. The second is use of technology, and we embed telematics in all the vehicles that we finance. We have got almost 250 crore kilometers of performance data on vehicles, right? So different use cases, different batteries, different geographies, different types of vehicles. We have data about all of them. If an OEM says my vehicle drives so much, does it actually do or not? I can tell you, right? So whether it is looking at driver performance, driver behavior, where does he drive, what time does he start, how much distance does he cover, therefore how much does he earn, how much does a vehicle go per charge, what is the area in which the driver drives, can we geofence the area, can we immobilize the vehicle? So we have all of that capability that we've built across the vehicles, right? We've even in terms of geofencing, we've actually created actual behavioral geofencing for customers, which means each driver, wherever they drive in the last 6 months, based on that, we've plotted their geofence. We've created triggers to say, hey, you know what, today he's done something abnormal. He's gone to a place where he's never gone before.
Sure.
And by the way, he's not come back in the last 2 hours. So is there something wrong with the vehicle? Is it getting stolen, etc.? How to retrieve stolen vehicles, how to keep the vehicle secure. So we've been able to build all of that through technology.
Understood.
And the third thing is building ecosystem partnerships. We started by creating partnerships with manufacturers because we were very clear that these vehicles are going to require a lot of manufacturer support for the next few years, whether in terms of replacement, creation of secondary market, etc., refurbishment of vehicles. So for all of that, we've created partnerships with manufacturers, where we've created risk sharing programs with manufacturers. Right. So basically, it has things like buyback guarantees, residual value guarantees, refurbishment of vehicles, joint creation of secondary markets as part of our standard agreements with OEMs. So even today, if you have to repossess a vehicle, it goes to the dealership, it gets refurbished there, and then it gets resold through that dealership. And we've been able to establish a secondary market. We've also been able to establish a secondary market price for these vehicles. Today, most of our vehicles get sold for about, on average, 80% of the principal outstanding.
Got it.
Right? So we know in our minds what the whole formula for lifetime loss is going to be. X number of people are going to default, which is your probability of default. And then we know how much the exposure is going to be, how much LGD, which is how much is the recovery we would do on that, which is about 80% of the principal outstanding. So we're able to really create the whole loss curve as well for the customer segment because of the partnerships we built.
Understood. Okay. I think that's the only approach, especially when the ecosystem is still developing. But fantastic to hear that everything from underwriting, management, asset underwriting is something that's been built at Revfin. Maybe the proof is always in the pudding, and the question then becomes how has it translated into now the many years of performance at Revfin? Could you maybe talk about FY24, FY25 a little bit in terms of credit? And this has also been a year where there has been more stress in the NBFC sector than in the last few years. So would love to understand performance for the NBFC.
Yes, certainly. I mean, in terms of our existence, 24, 25 have been really stress market situations for lending. But also, if I talk about electric vehicles specifically as well, there's been a lot of stress. Right. So one thing I want to say is that in terms of our net losses, all through the 6-7 years we've been in operation, we've kept them below 2%, including the last 2 years.
And when you say net losses, this is net NPA, right?
Well, this is net loss to us, which is, NPA is more of a, let's say, a future loss. Let me put it that way. But when we look at our actual losses coming through, it's been less than 2%. I'll talk about NPAs as well because that's a more standard term. So our gross NPAs have remained about 3. And then we are able to repossess vehicles and resell vehicles. So the net losses to us come to around 1.5 to 2%.
Got it. Understood. And how is that So I think that's been a fairly good number, the kind of segment that you're playing in, and some of the other segments where we see lending happening to maybe people coming from a certain unbanked or less banked sector is typically happens much higher. So that's great to hear. Could you also just throw some light on the overall financials in terms of profitability, revenue growth over this period of time?
Sure. So FY23, FY24, we were profitable, meaning PAT positive. FY25 will have a small loss, but operationally we are still profitable. We've had to create certain provisions, which are timing-based provision rather than provisions for losses, because we also do leasing, so we have to create certain provisions for that, which have resulted in a slight loss for us. But otherwise, underlying we are profitable even in the last financial year. In terms of revenue, last financial year before I go to revenue, let me talk about AUM growth. AUM in March 25 was about 617 crores. The previous March was 410 crores and the previous March was 148 crores. We've seen a substantial amount of growth happening over the last 3 years. Our revenue in FY25 was about 130 crores. And revenue for us would be basically interest and fees income primarily. In terms of disbursements, we did 550 crores of disbursements in FY25. And this year we have about 750 crores of disbursements planned.
Understood. I also, to wrap up this section on financials, I also just want to touch upon balance sheet numbers like net debt as well as capital adequacy ratio. I know there have been net debt to equity is about 3.5, capital adequacy is in the 20 to 22% range, which are obviously above the required thresholds and very comfortable from your governance perspective. But how do you think about them playing out in this financial year, FY26?
Yeah, so I think right now, if I look at it, the market has taken a slightly conservative view, right, in terms of leverage, etc. Our own plan has always been to keep leverage at around 3x. Of course, we are at about 3.5x at March, but actually by the end of June, we should be less than 3. So we are trying to keep it at average somewhere between 2.5 to 3. Of course, there will be times that will be slightly lower and slightly higher depending on how and when we infuse equity into the business. But 3 generally, I would say, is where we want to be at.
Understood. Is there a capital raise that's coming in June that's making the net debt lower?
No, actually, June is coming because so we are actually infusing some equity into the business in June.
Understood.
Some of our existing investors are infusing some equity into the business, so that's one. Also, we have certain large chunks of debt that is being repaid in June, so that's also helping us.
Understood. Okay. I want to move now, as part of the next section, Samir, to talk about the specific transaction that we are offering on the GRIP platform and which has Revfin assets. Just for
Yeah.
everyone's benefit, this is roughly 1100 loans that Revfin has given to various borrowers, if I'm correct, across some 15 states, and that, to Samir's point, reflects the breadth at which the business has been able to penetrate. Some of the states, for example, Assam is a large portion of it, but actually, 15 states, so it covers a large part of India. Samir, as we talk about this pool of loans that investors are investing in, um, could you help just first draw out what a typical loan looks like in terms of LTV, tenure, so that it gives perspective to what is the line
Yeah.
asset?
Yeah. So first of all, just before that, let me also give a bit of a lay of the land. Most of these loans would be three-wheeler loans or e-rickshaw loans. If I look at the e-rickshaw market in India, there is a very heavy concentration in UP and Bihar. So UP plus Bihar plus Assam constitute almost 75% of the electric three-wheeler market in India.
Okay.
Okay. And our portfolio also reflects that. Apart from these three states, we have very high concentrations in Uttarakhand and Madhya Pradesh as well, right? But between these five states, a major chunk of our portfolio lies, but also most of the sales also happen in these five states, right? And that's the reason why you see concentration in the portfolio we've given you as well in these states. Now, if I look at a typical e-rickshaw, an e-rickshaw, let's say, on average costs about 1,60,000 or 1,70,000 rupees. Our loan typically average tends to be about 1,20,000, 1,25,000 rupees. So our average LTVs tend to be about 70%. We do up to 75% on e-rickshaw loans. The tenure for these vehicles average would be about 22 months or so. We go up to 30 months, sometimes even 36 months, depending on nature of battery, etc. But from 18 months to 36 months.
Understood.
Yeah, and the yields on this product can basically vary, and if you want, we can discuss that as well, Nikhil.
Yeah, no, I think this is helpful. And just, I want to relate again back to the product on the platform. The tenure of the product on the platform is actually much lower. There are two reasons for that. Number one, these are all seasoned loans. So they're given out by Revfin 3 to 6 months back, and the performance of the loans has been good, which is why they've now
Yeah.
been associated with this product. And second is
Yeah.
because 30 months, 35 months is the final maturity, is the full duration of the loan. But because of prepayments that happen, etc., the tenure of the investment actually turns out to be much shorter for an investor buying into this SDI.
Yeah.
Perfect. Samir, also, when you think about this loan portfolio in terms of the overall book, you already mentioned from a geographic perspective that it would be very representative of the business and, in fact, industry. Are there anything else that an investor should know versus what Revfin is typically doing in business? Is it very similar, or is there something that stands out?
No, this is very similar. It actually reflects our portfolio extremely well. So from that perspective, it's not very different to I would say this is our core business, right? And even if I look at our overall book, of course, this what we would have given to you is primarily three-wheelers, but that our loan book, our core is three-wheelers, so it's not very different from our business or what we normally do. Of course, we would have done other things as well. We would have done two-wheelers, four-wheelers as well. But like I said, our core business is three-wheelers. So the portfolio we've given you reflects that.
Perfect. One of the other things that is something which gave us a lot of comfort in the structure is also large concentration of OEMs, which is someone like Bajaj. Are you seeing, obviously when you started the journey, the people like Bajaj, etc., were not yet building three-wheelers, and now
Yes.
many of them enter the OEM market on the EV side. Are you seeing that transition happen and more of your portfolio move to more established OEM?
Yes, we are actually witnessing that. So our partnership with Bajaj really started almost about a year back only, right? So of the 6 years we've been in operation, we worked with Bajaj for maybe a year, and we are seeing a lot of growth in that portfolio with Bajaj. Right, and Bajaj also is a manufacturer of e-autos, which is an L5 product category. So we are also seeing a huge shift happening towards that particular segment as well. Right, and so I think our philosophy has always been work with very few, but work with very good OEMs. And when I say good, I don't mean in terms of brand only, but I'm talking about products and after sales service support, etc. All these things need to be very, very good. So we only work with 4-5 OEMs across each product form. Right. So from that perspective, we've always tried to maintain a very healthy portfolio. And certainly now with Bajaj, of course, we are scaling that partnership quite rapidly. I think it just builds onto it and really helps us work with, let's say, bigger, better brands.
Understood. Last question for you, Samir. And this is a question that I get asked most often, which is that if Revfin has access to many other lenders, right? Your cap table obviously has some great equity investors, including Asian Development Bank, but also your balance sheet has Sidbi, Northern Arc, Vivriti
Yeah.
as lenders. What prompts you to work with Grip and to be able to offer this product to retail investors?
Okay. Nikhil, maybe both of us can give a part of this answer. From my perspective, look, I think we are always looking at ways to diversify our capital infusion. Of course, we have equity, we have debt, but we always keep looking at new structures and how do we get different forms of capital into the business. I think it's good from a growth perspective, it's good from a diversification perspective, and it also mitigates a lot of risk in our business, right? Because different sectors, different forms of capital raising go through different cycles, right? There was a funding winter about a year and a half back, where equity capital was becoming very difficult to raise. Then NBFC sector or financial services sector has gone through in the last few months a lot of ups and downs, a lot of tightening of regulation, etc. So that also, creates a slightly conservative view in the market. So I think it's always good to expand your sources of funds. So from that perspective, it's been very, very helpful. And of course, I would also say, as you do more and more things, you also learn about different processes, and the process, etc., has also been very, very smooth for us. So I think that's also been very, very good.
Understood. From our perspective, it's always been about how do we give a retail investor who wants to invest 10,000 rupees, 1 lakh rupees, access to the same product with the same security package as that of a large institution would be able to access from you, right? Whether it's a Sidbi or a Northern Arc. I think the ability to do that at a competitive pricing, right? The pricing, I think that the product offers for you is is similar in pricing to what you would get from a Northern Arc or a Vivriti or anything
That's
else.
right.
So it works from you because there's no additional cost, and it works for the retail investor because they directly get access to the same return and the same level of security. And I think that's always what we've focused on.
Absolutely.
Perfect. Samir, I will just wrap up this session by giving everyone a very quick brief on the investment opportunity, and obviously they can read more details on the website. This product is Lonex Revfin. It is an SDI with Revfin as the originating NBFC. As mentioned before, this is 1,100 plus loans given by Revfin each season for 3 to 6 months. The cash flows from these loans, principal and interest, are coming to you as an investor on a monthly basis, and allow you to earn a fixed return over the prescribed tenure. As part of the SDI structure required by RBI and SEBI, there is a security package in this transaction consisting of a cash collateral, which is the cash that Revfin has provided as a security. There is an over collateralization of loans, which means for every 100 loans that you are buying, you are getting 120 loans, or roughly 120 loans, as part of the security package. And then there is also vehicles which are underlying each of these loans. That is the construct of this transaction. Do check it out on Grip. It's an A- rated transaction. And we're obviously excited to have this first partnership with Revfin on the financing side and look forward to do more. Samir, thank you again so much for your time. Appreciate you taking this out. and look forward to keep working with you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.